On December 1st, the Dow Jones closed at its highest point in 2023, and it finished November with almost a 9% gain. Part of the reason behind the Dow Jones' recent success is because the Fed has decided to hold rates instead of continuing to raise them for the time being. Many people in 2022 and in 2023 talked about the coming recession, but there hasn't been a recession, and it's starting to look more and more like there won't even be one. Actually, speculation has completely changed directions. Many investors now are predicting that the Fed is going to lower rates in early 2024 as inflation comes under control. According to the president of the Chicago Federal Reserve, in 2023, we've seen the fastest inflation slowdown in 71 years. Fed has done a great job this year of slowing down inflation. Fed's done a great job on keeping inflation under control. When inflation started to rise, they're very quick to raise rates, and now that inflation has stabilized a little bit, they're holding rates, rather than being too reactionary and raising rates too fast or lowering rates too fast. There's been a shift in monetary policy as well. Lower volatility could mean we could see more investors moving from treasuries into equities. Another contributing factor is falling 10-year treasury rates. In October, we saw rates rise above 5%, but in November, we saw them crash down to around 4.34%. As we talked about previously, many investors are speculating that the Fed is going to lower interest rates next year. So if this happens, we're going to see a big decrease in treasury rates. So if the Fed does decide to decrease rates, we're going to see more borrowing from individuals and companies, which helps to stimulate the economy. Gold crossed over $2,100 per ounce, which is a new record high. There's been a lot of speculation about gold's price in 2024 going a lot higher because of interest rate cuts and a weakening US dollar, but something to keep an eye on in relation to gold's price is the central banks. And the reason being is that central banks have been hinting at buying large quantities of gold as an alternate to the US dollar. It's simple. When the US dollar weakens, it makes it easier for international investors to buy gold in the US because exchange rates for currency are lower. Also, when the interest rates are really high, less people are going to be buying gold because it doesn't pay interest like bonds do. Well, in 2022, the S&P 500 was down almost 20%, and there was a lot of concern about a coming recession. But those fears have mostly subsided. The stock market and the economy change constantly. And as an investor, you need to adapt with them, or you're always going to be lagging behind. So, with that said, you need to be aware of what's going on in the stock market and economy and make your investment decisions based off of that information.